Well, for more on oil, I'm now joined by Viktor Katona, lead crude analyst at Kpler. Victor, hi, thanks for joining us. China's reopening has been quite dramatic in recent weeks, but why don't you think that will have much impact on the oil markets this quarter?
Well, as things stand right now, factors are offsetting one another. So it really depends if you're an optimist or if you're or a pessimist or a bull or a bear in the market. Because, for instance, the quotas that China has been issuing they are massive by any standard. But an optimist would say, look, this is actually great, an indicator of great activity in Chinese refining. A pessimist would say, Chinese domestic demand is still very much sluggish. It's going to take months until it can pick up to pre-pandemic levels. And it has been very much the story of the past 3-4 months, really. We have indications that China is opening up, but because it's so sloppy, because we get effectively an array of positive news which are interspersed with an array of negative news, it's never really a net positive. Even though everyone understands that China at some point will be back, it's not going to be this quarter realistically. It's going to be at some point later in 2023.
The other key question, Victor, is where China is buying its oil. I know you think that much of this is going to come from Russia. So does that mean they're essentially creating a separate global market apart from US sanctions, which will undermine G7 policy that aims to reduce Russia's earnings from its oil?
Absolutely. I mean, if China is coming back, it's very good news for the three main sanctioned oil-producing economies out there in the world, which is right now Russia, Iran, and Venezuela. Iran and Venezuela are already almost 100% China reliant. So if China is feeling well, these guys are feeling well too. Russia is really in search of an incremental market where it can lay its oil, in addition to India, which is really strong. It has been the growth story of 2022, but there's just reliance on India. There needs to be something else. If China comes back, Russian crude is discounted. The geopolitical links and the strategic partnership is there. Basically, this is pretty much a passageway for them to be buying more discounted Russian crude. So it's definitely good news for everyone who's under sanctions right now and very much undermining the idea of an oil price cap.
If global oil prices continue to reverse their gains of the last year, Victor, where does this leave OPEC? Are you expecting them to make more defensive moves?
At some point, yes. Right now, OPEC is really watching what's going on. It's looking into the oil price volatility that we have been seeing. I mean, we had oil price almost at sub 70s, which is already kind of, borderline, the fiscal borderline levels that they would be working with, the break-even levels. OPEC is really watching because it knows that there's a bull in the China shop, so to speak. And that bull is basically the promise of higher prices once China comes back, because they maintain the supply discipline. They have all the levers to basically control what's the incremental production, but they still don't want to rush it too much. They understand that it's going to be volatile. They understand that there will be swings and roundabouts, ups and downs as we go into the upcoming weeks. But the end result will be sweet. So there's no need to rush it. At some point, they will be even more defensive than they are right now, but currently, it's still not that right moment to do it.
Well, thanks so much for that insight. Viktor Katona, lead crude analyst at Kpler.